Hello my dear students, welcome to the class of 10th English medium. The subject is Social Science, chapter 18, Price Rise and Consumer Awareness, brought to you by Vitan Sir. Now I have divided this chapter into three different parts, and this is the part 1. In this part, we are going to talk about the price rise, the reasons for that, why we should control price rise, and how to control price rise. So, among many social and economic problems of India, one problem is price rise. Constant and continuous rise in the price in different fields of economy at a high rate is called price rise. So my dear friends, this is the definition where the price constantly and continuously keeps on increasing in many different fields of the economy at a very high rate. Then only we can call it a price rise. Price rise along with stability is actually beneficial, okay, when it rises with a very short rate at a very limited scope. For example, with increased prices, the profits of producers increase, which increases their production, and even they can set up new units. This in turn increases the employment of the people. Also, with the increased profits, more salary and wages can also be given. That means this increases the purchasing capacity of general public. That means they can improve their standard of living, they can buy more products and goods, they can have a better quality of raw materials, the essentials. That way they can live better. Thus the gradual price rise is actually good for economy, but I am talking about gradual, that is a slow and stable. But when there is a sudden and continuous rise in the prices, that means suddenly prices skyrocket, and almost all the sectors of the economy, the supply doesn't increase automatically. If the prices increase overnight, then we can't increase the supply overnight. Thus, the supply of money increases in the economy. The prices are more, people have to pay more for the same quantity of goods, and that means the quantity of money in the economy increases. Excessive money is used on less units of commodities. It creates inflation. Inflation means the rises in prices of the economy. This destroys the balance of money, creating disturbance in the economy. There is a very crucial and a very we can say weak balance of money in the economy which gets destroyed easily, and price rise are one of the factors which destroys this balance of money. When the balance of money is destroyed, usually poor get poorer, rich get richer, and the disparity of income between the people increase. Still, price rise is not always inflationary. That means it's not necessary that with the price rise always inflation increases. For example, prices of basic commodities used by common people can be seen rising, with price in other sectors stable or decreasing. You can just check out this diagram here. The price of vegetable increases at a very high rate, while you can see that there is a negative trend at the right side where the price of mobile are depicted. So that means the potato, vegetables, onions, basic necessities increase while this technology decrease. So actually inflation is not there, but still it is not good for the economy. Reason of price rise. Why prices rise? Number one, increase in monetary supply. That means when the money in the market increases, the prices rise. The supply of money in the market increases by three methods. Number one, by printing new currency of by the government, by increasing monetary transactions, and by decreasing the rate of interest on debts. So when the monetary transaction increases, when the new currency is printed, or when the interest rate decreases, the money in the market increases. With increase in the supply, salary, wages, purchasing power, and effective demand of the commodities also increase, but actual supply of goods does not increase, which raises the prices. That means with increase in the supply of money, the salary of people, the wages, the purchasing power of the people, also their demand increases, but the supply of goods does not increase, which increases the price of those same goods. For fulfilling expenditure, government prints currency and increases the supply of money, resulting in increased administrative expenses. That means if government needs to spend more, it just prints new money, which increases its expenditure. That new money adds up into the already the money which is already in the market, which increases the supply of money in the markets. This money is used for administrative expenses, welfare expenses. People can use it for celebration and fairs. Sometimes government uses it for planned or unplanned expenditure, which shows increased purchasing power of the consumer. That means the purchasing power of the consumer. Consumer has more money so that they can purchase more. This shows increase in the purchasing power. With increase in the purchasing power due to increased supply of money in the market, total demand increases. But the supply of the commodity is same. That means we demand 100 units of goods, but goods are only 50. So of course those 50 units will be sold at double the prices. So this creates a deficit of goods and it raises the prices of them. Thus, with increase in the money in the market, but due to lack of adequate supply, the prices of goods rise. This may also happen due to increased loans lent at low rates and easy conditions. That means sometimes banks also give out loans at almost free of cost without any difficult conditions, without keeping anything as mortgage, and at a very easy rates of interest. That means people take more loans, they get more money which they spend on their daily needs or even luxury, and that means the money in the market is increasing, people are demanding more, and that increases the prices. Second, population growth. It's a pretty basic thing that when the population increases with the rapid speed, the demand for goods also increases. Five people demand more than one person can demand. So naturally, with the India's population growth of 1.9% in 2011, the annual growth rate of India was 1.9% in the 2011 year. So with that, more people need more goods and less goods are produced, which increase the prices. Increase in exports. Okay, when the goods from India are exported to other countries which are encouraged by the government, the essential commodities are sent to foreign nations. This creates a shortage of such goods at home, which increases their prices. High price of raw materials. Okay, the raw materials using which the goods are created, if they are sold at very high prices, maybe due to shortages or due to other reasons, which increases the production cost of the finished goods. So workers too ask for raise in salary, which increases the cost of production. So to earn profits, the prices must be raised. So when the raw materials and the workers are getting costlier, the production cost is increased, which increases the prices in retrospect. Black money. For the purpose of not paying taxes, excess incomes or business deals are hidden from records. So the incomes from these activities can't be deposited in bank or invested in elsewhere because they are black hidden money. So this money is used as fast as possible by purchasing unwanted things, luxury items, costly things, for example, Harley Davidson or Ferraris. This creates price rise in such commodities. Price rise by government. Now I am talking about the prices which are risen by the government itself. Many commodities like petroleum, fertilizer, crops are controlled by the government. Sometimes with change in the policy, fiscal policy or monetary policy, government may rise the prices of such commodities. So that would be price rise by government. Natural factors. So the certain factors which occur in the nature, for example, natural calamities like flood, famine, fire, drought, and some human-made calamities like war, riot, strike, may create shortage of commodities in market. So when these commodities are less in the market, they are sold at a huge prices. For example, in Surat, when the flood came, I heard that the bhajiyas on the laris were sold for some 1,000 rupee or 2,000 rupee per kg. So it happens due to natural factors. Smuggling, hoarding, and black marketing. Due to high import duty rates or control on import of goods, goods are dumped into country by secret means without paying taxes, which is called smuggling. This creates price rise. So when goods are smuggled without the information of the government, without paying the duties, they are sold at high rates into the market because they are considered rare goods, and this increases their prices. The stockpiling of goods in the present for the purpose of creating artificial shortage of goods so that it could be sold at high prices in the future is called hoarding of goods. This is done to raise the prices. Okay. The other option here is that if we are fearing that prices of certain items will increase in the future, we buy them in a lot of quantities and store them at home, which creates an artificial deficit of goods in the market, which increases its price. So that's the second thing which happens due to stockpiling of goods. By artificially increasing the scarcity of goods in the market and then selling goods at a very high prices by unfair means or by hidden from the government or from the back door is called profiteering, and sometimes it is also known as black marketing. So certain goods which are not available in the general market are sold in these black markets at very high prices. Why prices should be controlled? We have seen what are the reasons for price rise. Now let's see why these prices must be controlled. First thing, the vicious cycle of price rise, which increases the profit, which increases the income, which increases the purchasing power, which in turn increases the demand, which increases the prices, destroys life of poor and middle class people. This becomes a cycle that price increases, profit increases, income increases, power, purchasing power increases, demand, which again increases the prices, which poor and middle class cannot keep up with. They are not the business people, they are salaried people or they are daily wages people. They cannot cope up with this vicious cycle, and in this process they die or they suffer from hunger or malnourishment or even a very low standard of living. Price rise decreases savings of people. This decreases their investments, which decreases the capital which people get from the banks and the financial institutions. This decreases development of new businesses, which decreases the employment and income, and when you are not employed or when you are not earning enough income, you again decrease your saving. So this is the second vicious cycle which happens due to the price rise. With increase in the imports and decrease in foreign investments, the foreign exchange is spent, which gives rise to new problems. That means when we import more because we have less commodities in the market and we export less, so this creates a deficit of foreign investments, which creates another list of problems in the economy of the country. When the production of necessary goods decreases due to lack of capital, because people are not having enough capital to produce them and they are not even earning profits from them, the scarcity of essentials is created. That means people, the essential commodities which are absolutely necessary for the living of people stops. This increases their prices and thus the living standard of people deteriorates, making poor more poor. With increased cost of production, the cost of export also increases. That means we are selling costly goods into foreign countries, reducing its scope in the foreign countries. The foreign countries are already selling those goods as cheaper prices, so why would they purchase our goods while the imported goods are cheaper? This means we earn less and spend more on foreign goods. What we import are less costly because due to the multinational companies production or the Chinese production, while what we export are costlier than their markets. That means we are spending more on imports and earning less from exports. This creates imbalance in imports and exports. This creates a whole lot of problems for the economy. With degrading living standards of middle class and poor due to price rise, immoral activities like theft, murder, robbery, betting, corruption, suicide, etc. increase in the society. So now, to stop these things from happening due to the price rise, what steps should be taken to control this price rise? Let's understand them one by one. Number one, monetary measures. That means monetary measures are the measures taken by the Reserve Bank of India, which reduces the money in the circulation of economy, which reduces money in the hands of people, which reduces their purchasing capacity. That means they spend less, which decreases the demand of commodities, and when the demand of commodities decreases, their price also decreases. Simple. RBI increases rate of interest on loans, which reduces lending of loans. That means also with increased interest rates, people save more into their bank accounts or in the stock market or something like that, and they spend less. Because they spend less, this reduces money in the circulation, in turn reducing the prices. With high bank rates, because RBI is charging more interest rate on loans, commercial bank also have to increase their rate of interest for the loans lent to the common public, which reduces the quantity of loans given, which again reduces money in the hands of people. Government securities, also known as government bonds, are sold by the RBI in the open market. This means people invest their money in securities for a longer period of time, during which they have less cash in their hand, which reduces their spending a lot. And when they reduce their spending, the demand decreases. When the demand decreases, the prices also decrease. Second, fiscal measures. Now, monetary measures are taken by the Reserve Bank of India, so the fiscal measures are taken by the government itself. In these measures, taxation policies, the public expenditure, and government projects are controlled to control the prices. How? Let's see. Government tries to reduce its own public expenditure. When they are spending in the public expenditure, they are giving money to people. So it postpones all projects which could be postponed and stops making new projects. This reduces money in the market because government is not spending, because money is not going into the market. That way people get less money, less expenditure, less demand, less prices. Government increases taxes like income tax, sales tax, corporate tax, etc. So when prices rise in the market, so that people will have less spending money in their hands, and so they will demand less goods. Now, because people pay taxes to government, people has less spending money, and because government is earning more, usually it gives benefits of that to the people itself. So people has two things: people spend less and they can get more benefits from the government. Government implements public loan policy where general public compulsorily have to give loans to government, or applies compulsory saving schemes where they have to make compulsory savings. On loans they do earn interest rates, but their money stays with the government so that they can spend less. Or in compulsory saving schemes they have to compulsorily save in the banks or government investment policies. So in short, they spend less, they demand less, and the prices decrease. Main aim of fiscal policy is to increase savings, reduce debts, increase taxes, and ultimately reduce the money in hands of public. So they demand less, prices drop in goods. Simple. The third step is to control capital investments. That means what to invest, where to invest. Investments in useless capital and luxury goods is diverted towards the essential daily necessities and cheap goods to raise their production. Thus, the prices of essentials drop and poor are benefited. So this way the poor people get their essentials at less prices. It doesn't matter because rich already have enough money to buy luxury goods even at a more price, but poor must be benefited first. Fourth one, price regulation and rationing, public distribution system. The public distribution system, or the PDS, was established in the 1977 to provide essential goods at cheap rates or free of cost to low income groups or people, poor people or the below poverty line people through fixed price shops, that is FPS. The prices at the fixed price shops or the fair price shops are lower than the market rate. The difference of amount is paid by the government as subsidy. Today we have 4.92 lakh FPS in India. The public distribution system PDS has been proven boon to the poor. Boon means the Ashirwad. The success of PDS and FPS depends mainly on the effective administration of the government, because if this is not administered properly, the availability, the distribution of goods and the honesty of employees matter. And as we have seen from our past experiences, this is not always good, but let's not discuss that right here. Fifth and the last step, administered price mechanism. It basically means government controlling the prices of goods itself. Government directly controls the prices of certain goods and commodities which are deemed necessity for the basic standard of living. This means the prices are kept at a level which all have to follow, and these are kept at a level such that the producers and the consumers both benefit the most. Government has implemented legislation regarding Essential Commodities Act in 1955 to set up an upper limit on prices of essentials. That means anyone who sells above this upper limit are penalized. That means no producer or seller can sell goods above this upper limit marked by the government for the essential commodities. That means maximum price is set by the government. Anyone can sell cheaper than that. Government undertakes legal proceedings against hoarders, black marketeers and profiteers under the PASA, that is the Prevention of Antisocial Activities Act. Stocking, pricing, godowns are checked regularly. That means those who are stocking goods for a long period of time with the purpose of profiteering, those who are pricing higher than the price set by the government, godowns where the goods are kept, all of them are checked regularly to see whether hoarding, black marketing or profiteering exercised or not. Until recently, prices of onions, rice, steel, railways and some life-saving drugs and even petroleum were monitored and controlled. Although today prices of most of these items which were either earlier controlled by government are today left at the mercy of market. That means they are not actually controlled today by government, rather they are controlled by the multinational companies, Tata, Birla and Ambani's. Depends whether they want to sell us as cheap or whether they want to loot us. It is at the mercy of the market. The efforts to control price rise are not individual and independent. That means these steps are not to be taken individually, but they are rather to be taken collectively, and they depend on each other. So, to effectively control the rise of the prices, all the steps should be taken together in a systematic way rather than in a scattered manner. Now, I will end this tutorial here. This was the part 1 where the price rise was discussed. Next time, in the second part of this chapter, we will discuss about the consumer exploitation, rights and the duties of the consumer, and the consumer awareness. So if you like this chapter, press the thumbs up button. If you love my channel, just subscribe it, share it with your friends, and let me know what you think about this chapter in the comment section below. I will see you in the second part. Till then, happy journey. Welcome students to Vitan Sir's Unacount Academy. That's better way to success for you. I am Vitan Vora and I teach accountancy, statistics and social science. You can contact me on my cell number 919426310184. Please give a sub to my channel and also check out my other video playlist which you can see on the screen. Thank you, and I will see you in the next video.